We definitely saw a lack of momentum beginning 2014, very different from what we saw last year at this time. What do you make of this right now? You're still bullish on this market.
I am bullish. It's not encouraging. I mean, I'd rather see the market go up with the shock because there's a natural tendency for it to go up, and there has to be some explanation why it didn't. I tend to ascribe it to the last few weeks of 2013. I think we may have robbed from Peter to pay Paul, and I think that's what we're going through right now, but that's temporary.
Joe, what about you? Lots of focus on the behavior of the market at the start of the month and for January generally. Given the pattern of the first couple of trading days, do you think we could be facing a rocky month, a rocky year, regardless of today's rally still?
No, I don't think so at all. I think the other guest described it perfectly. We had a lot of strong momentum in late December of last year, so it sort of makes sense that we would have a little bit of a breather for the market here, perhaps a correction in time or consolidation, and then perhaps a nice up leg in January. I think one of the figures we're looking at is short interest. We had one of the strongest years in the S&P 500 in quite some time, and yet short interest on the components or the stocks within the S&P 500 at its highest level since June of 2012. So a heavy amount of skepticism from the short sellers, which are essentially betting on those components to decrease in the face of strong price action. That's generally and historically has been a bullish combination.
All right, we welcome Amy Wu from RBC Capital Markets. We got the wires warmed up enough that she could join us right now. And you've been watching sentiment through options trading action. What are you seeing right now as we begin this new year?
Well, hi, guys, and Happy New Year.
Happy New Year.
Happy New Year. Kind of echoing what Joe said as well, from the options perspective, your skew levels, your term structure, your sentiment is still more bullish than bearish. And even with payrolls coming up, we're pricing in a very ho-hum plus or minus 1% move. I'd say really investors on the options front are much more focused on earnings. They're much more focused on single name volatility right now. As we head into earnings season, it really hasn't been that much about the macro, that much about the downside.
We do have one after the other lining up this week, Anton, in terms of event risk, if you wanted to look at it that way. We've got on Wednesday the Federal Reserve minutes. Thursday we get Alcoa's report. Friday we get the jobs report. Which of those is going to be most important in terms of figuring out where the market goes from here, you think?
Yeah, since 2007, the Feds have been such a dominant factor for investors. And so I will pick the Fed's report. That's going to be very, very important. They've had major impacts on investor sentiment. Every time they make a change in the announcement or their monetary policy, the market responds immediately. So I'm going to be paying attention to the Fed's policy and their announcements.